Good morning, everybody. Welcome back to Cilinix Crypto. Hope you're all doing great, and welcome to a new video, an update on Dogecoin. Wanted to make a quick video giving you my thoughts. We haven't had that much movement in the last 24 hours, but still, before that we did, and I think I haven't covered this since Wednesday or so. So I just wanted to make an update. I know a lot of you are still holding, /trading, /looking at Dogecoin, so that's why. So here you go. I'll give you my honest thoughts, but before we dive into Dogecoin specifically, I do want to mention that I have my own premium trading group. So if you want to become a more profitable and better trader in crypto, consider joining. You'll receive access to my trade setups, which I take, and I'm a profitable trader, but also an exclusive traders chat room, which is filling up nicely, and some really good traders in there. And apart from that, you also gain access to my training guide. So consider that if you're interested in that. If you're not, let's get into the reason why you clicked on this video. All right. So now to Dogecoin. What we're seeing, first of all, when looking at the market circumstances around Dogecoin, is that the volume is pretty stable actually, but it has dropped down quite severely in the last 24 hours. It's down about 18 to 20%, now down towards 300 million, which is still relatively high compared to like last month, but it has dropped down significantly since when we were very, very bullish. And what we're then also seeing on the charts is a bearish image, all right? Because what we're seeing on the short term, at least, is lower highs right here. I think most of you can see that, but right here we're making lower highs. And then apart from that, we also had some major bearish breakouts. First of all, below this trend line right here. Second of all, the EMAs are also flipping into resistance right now, which was all expected if you watch my last videos, by the way. But that does mean that the market structure right now on the short term, I would say, is still neutral, but or on the long term, on the like medium term, I guess, it's still neutral, but on the short term, we're flipping bearish. All right. So what you can see right now, for example, is that this level right here between 7.5 and 7.6 cents ultimately is turning into a very strong resistance level. So in general, the most likely scenario is that we might get some sort of a liquidity grab from that area. But in general, what's most likely is that we'll drop down towards 7.2, which is still a very strong support level. But eventually we will drop down towards our main support level, which is around 7 cents. Big psychological support level, but also a very strong, historically strong support level. All right, so that looks most likely. That's also taken into account bearish momentum coming from Bitcoin, which you always need to take into account. So that's the most likely scenario for now, all right, for Dogecoin, I would say. I do want to mention, as most of you know, that the main catalyst behind bullish momentum from Dogecoin is always what happens with Twitter /X /Elon Musk. So at any point of time, if Elon Musk or if any news is announced in that whole like relation of companies and persons, then what will happen is that we will become very, very bullish. We'll break above 7.5 and 7.6 cents, and we'll easily at least get up to 8.6. All right, so we'll break above 7.6, get up towards 8.6. Is this a possibility? Yes. Is it realistic? Yes, but it depends. It depends on if we get news or not, because if we don't, we'll just continue the current market structure, and the current market structure is flipping from bullish to bearish, which means that we're going to drop down at least through the 200 EMA as well, which means that the next big support level is 7 cents. And that's also for now still my expectation of the most likely scenario. So that's my take on it. If you do have any questions, then let me know down in the comments. But for now, thank you for watching. Take care and bye.